you have to divorce the human tragedy from the economic impact. As far as the economic impact is concerned, what are you guys expecting over the coming months, and how's it going to shape policy, if at all?
Well, we're still keeping our call for a December rate hike from the Fed, but obviously the impact of the hurricane is that the economic data is going to get quite noisy. So I think the market was going to have a hard time navigating some of the kind of ups and downs in terms of economic data. But I agree with what's been said before. I think the Fed is looking for at least some signs that inflation is bottoming out. I don't think we're going to have a huge move in CPI just because of the kind of the year base effects. But we could see a bit of a higher move in wages. So we're really looking at average hourly earnings. We expect those to go to 2.8% by the end of the year. And that could give the Fed some ammunition to hike.
Your base case for a hike at the end of the year, who are the people that you're following, the speeches that you're reading that suggest that's going to happen?
Well, it's the Fed personnel situation is becoming interesting with Vice Chair Fisher leaving. And look, we know who the key people are. It's Yellen, it's Dudley. Dudley was very much focused again on financial conditions in his recent speech. I think that's an indication of how the Fed is thinking about it. But it's becoming more of a close call, and as you know, markets are only pricing in about 30%. So we're holding on to it, but it's becoming a closer call for sure.
So, David, as Vassili says, inflation in the United States is probably key because it will largely drive the Fed, whether we get that December increase or not.
Yep.
What are your expectations on inflation? What are you looking at?
So I would say we're in a very similar boat. We believe that the Phillips curve is alive and well. We think it may be a little bit broken, but we do think that further tightness in the labor market should begin to feed through into an uptick in average hourly earnings, which should eventually manifest itself in some inflation. What I would say, though, is that I think it's important to remember that globalization has made the labor market global. So just because we're sitting at 4.4% unemployment in the U.S. doesn't mean that globally the labor market is tight. I think we're getting there, but we need to see conditions tighten a bit further in places like Europe and emerging markets before we really see wage growth begin to lift in a way that it would push inflation higher.